Good morning, traders. Captain Jim James here with your daily brief. So I had to take off yesterday unexpectedly. I did want to talk briefly about a few things. First, that I still don't believe in the doom and gloom Armageddon scenario for our market. It would take a lot of proving for us to get there. But as we've said many times, we are in a seasonally down period of the year. It lasts sometimes from September into October. We can get a nice holiday run, usually into Christmas or Hanukkah or Kwanzaa, whatever you celebrate. Sometimes we don't. There have been years where we have gone down during the holiday season. So, of course, there's always that chance, right? And I think there's a saying that's either, sell in May, go away kind of a deal, right? So you get some more selling after the first of the year in February, March. And then you get some more selling in May, right? Sort of in the back end start of a cycle of de-risking to put more risk on once spring is over for the summer months. This cycle takes place most years. It can change, of course, but with the cycle starting now, let's say in September, the point that I want to make to you is that you will start to see doom and gloom news from now through the end of the year, and for good reason. People want to empty the dirty laundry. If you're a part of the government, or if you're a part of a market, or if you're a part of a company, there's always that time of the year where you're like, well, we're going to air some dirty laundry. When do we do it? It was interesting to see Samuel Adams air their dirty laundry early in the summer. They had no need to do that. Well, they did. They should have aired it much, much sooner. But I'm surprised that they didn't wait to air that dirty laundry until Q4 ER statements. It's a great time of year to start to air your dirty laundry. So what this leads me into is we have 5 things we have to be considering as we head into fall and winter. And I want you all to go out there and kind of do some research on this stuff so that you have an understanding of the interplay of it, because I'm going to do a video on this coming up here in the next week or two. I'm going to try to put something together about the cycle of this news that is going to come on the front burner. Now, I'm not talking about unknown news, but stuff that we know. We know that inflation is eventually going to become important. We know that. Whether you believe it's transitory or not, you know that it's not transitory, right? You know deep down inside that inflation is not transitory. It is not going away. You're not going to raise the price of an apartment or a house or the price of anything that you're selling and then want to lower that price. Some staples can go down, price of meat can go down, and milk and that kind of stuff. But you're not going to take a job for $20 an hour that was once $15 an hour and then accept going back to $15 an hour. So parts of inflation are here to stay, and it's a matter of when the market determines that they want to make it an issue. And then we also have taxes, right? We have the tax proposal that was made. We already knew about the tax proposal before, but we know we have that on the table. We also know that new taxes are never good for the stock market. No matter what anyone tells you, they are never, ever good for the stock market. You could say to yourself, well, I'm a Republican and we'll go against this, or I'm a Democrat, I want these kind of things. It doesn't matter which party you're from. It's like kabuki theater. The Republicans and the Democrats love to tax, and they love to give tax breaks too. They'll tell their supporters one thing and do something completely different. The Republicans love taxes just like the Democrats love taxes. They can play the market when they buy and sell their stock positions regardless of how taxes go. So be aware of that as a trader. Have your Main Street cap that we talk about and have your trader cap. So if there's talk of taxes or the chance of increasing taxes, if the Democrats have a chance to pass those taxes, even if there's kabuki theater saying we don't want them, they do want them. Red states want more taxation in states like California and New York. They want to pull that money into their states. The reality is those states are poor. They need that money. The reality is that Democrats want social services, right? So they want not just social services, but they want better infrastructure, better services. This is their ballpark supposedly, right? But to believe that neither side doesn't want it is kind of fucking crazy. And whenever the scenario is set up as such, where we have a Democratic president, a Democratic Senate, it's easy for Republicans to get off the hook if they pass taxation. So we have to be concerned about that as a trader moving forward, taxes, and that they do matter. So we've talked about inflation and taxes. Then we have the infrastructure bill, which is still passed in the Senate, but it hasn't been voted upon. It still hasn't gone anywhere. I would look at the infrastructure bill, which I've been saying since, I want to say spring on Twitter at least, which is, I make jokes about it being the Guyana or the China bill, which is what it is. It's the infrastructure bill is something that will be like a carrot out in front of a horse. It will be milked to make the market rise and fall until it doesn't matter anymore. And but that is coming to some fruition as well. We're going to have to take a look at the infrastructure bill, and then the debt ceiling will be used as a negative news piece to drop the market, although we all know they're not going to default on the debt. If you don't know that, I promise you, they're not defaulting on the debt. That's a news piece that'll be used typically to just dump the market. The last one I want to talk to you about is the bond market. And the bond market this year is kind of wonky right now. You've got like a grift going on where normally the bond market's not too active this time of year. And right now specifically right around Labor Day, it's become active. It's almost like that comment, I don't give a shit, just take my money. And the sweet talking that's going on in the bond market is bothersome. It's unusual. It's not normal. And it's, hey, take your money out of equities and send it into the bond market. You're going to be safer there and make more money there. That's the basic term of it, right? The idea of it. But it does stink to high heaven. It does smell bad on itself. So we want to put these 5 things together: the bond market, inflation, taxes, infrastructure, and the debt ceiling, and try to find out how that impacts our markets. I don't think that it impacts where we have that black swan event. But I do think that it is going to impact us from now through into springtime. And so just keep that on your plate. I'll try to make a video on that. We're going to get into the charts for today. We have one, and I left this page up here. This is the Financial Times. You can look this up on your own. This is companies rush to exploit fizzing bond markets. You should read this article on your own time. Do some due diligence on it. And then we have Congress trying to pass the Biden infrastructure plan. We've got the government funding bill and the debt ceiling. All 3 of these are important items. And then one more I haven't looked up I wanted to show you guys I saw some article on CNBC yesterday. I talked about how investors are fearful of our market, and I just don't see it. If investors were fearful of our market, we would have dumped into this week. We would have dumped into last week. It would have started last week, and it would not have ended. As of yesterday, at the start of yesterday, I think we were down 3 points over 15 days total. That news story is being used for quad witching so that there's a reason. They always need a reason for why the market is down, right? Why market's in turmoil. So I'm not buying that bullshit either. So let me turn this one off here, and then we're going to switch over to the calendar for today. Today is Tuesday the 14th. We've got the CPI. This is the inflation number. Does it really matter? I don't think so. I don't think it matters. I think Wednesday is the setup for Thursday. It should add a little bit of volatility this morning so that we can get the price down on equities, but I am looking to go long at some point this morning. Even if the market does dump, if it takes all day long for the market to dump slightly more, that's fine as well. I think CPI today is going to be a sell the news event for bears at some point. And that does leave us with a quiet Wednesday, setting us up for Thursday. This is really what we want to be looking at, which is claims and continuing claims. So we're going to move into the chart for ES. And haven't made any changes here. A little bit closer. This is kind of neat. You can see yesterday's open I believe was right here. This was yesterday's open. Let's take a little bit closer look. Yep, so this right here, this was the open yesterday. I posted on Twitter. I had purchased calls on Friday, and I talked to you about if we did not get further dip on Monday morning, to expect this to be short-lived, this run up here to be short-lived, right? We talked about this happening I talked about this on your first video, and then I also talked about it before the open yesterday. So I did end up selling my calls right at the bell yesterday, and I think I made 100% or slightly above 100%. I was a little pissed off though, because the calculator that I had usually comes in lower than what I get for the volatility or interest that kicks in on stocks that are up on Monday mornings, and I was low. The price, the true price, was lower than it should have been on the options, which kind of tipped me off on the market makers right now and what they're doing. There is a huge money grab in our market right now, whether you're a bull or a bear, and especially in the options market, that you need to be aware of until the new contract kicks in on Friday. Just to be clear here, we sold this out yesterday. It immediately started to sell off yesterday, and I ended up stepping away right down here. But you can see that we had this support line here on Sunday. This would have been a moment for you to go long yesterday at, I believe it was 3 o'clock in the afternoon yesterday. You could have taken a long position on this support line and run this up. Now, I was gone after the market closed. We might be going green, but I don't know that I would have held longs into this morning. So I wouldn't have. I would have sold these longs at some point towards end of day yesterday, if it was even possible. I wasn't around the market yesterday, so I don't know where we ended up ending yesterday. But this was a great buy yesterday in the afternoon around 2 o'clock. I ended up taking off, and I think I also put out there a iron condor, which this is fitting this channel right now nicely. Now, for this morning, what you're looking for is that same thing, right? You're looking for 44.65. You're going to be looking for 44.82 above, and then down below we have some firm support down here at 44.38, and then further below it's at 43.93. I think it's slightly higher. I think the 50 is at 44.08, if I have that correct. We might get near that as we head towards OPEX on Friday. When do you get really bullish on ES or SPY? You know where. You know it's this yellow line right here. You absolutely know. You can actually see I'm slightly off on this line that I drew here. So you can actually move it down slightly. And you know where we start to get bullish, right? We get bullish. Let's say we break above here. We've talked about this, right? We break above, touch, hold support, and we make a move up. Sometimes that support is a double tap, right? 1, 2. So you'll see this 1, 2, and that would be the bear trap, and then we move higher. You want to be waiting for the confirmation before taking this any higher. If we come below here, you know where hard support is to be taking your longs intraday. If you are a trader that doesn't know when to be making entries or exits, take the time on whatever charting software you're using to put these hard supports and resistances in. And when you're on that daily chart, scale out to the 10-day or 5-day or 1-month chart when you feel lost. That's something that I do whenever I'm feeling like I don't know where to take a position, or my brain is telling me, hey, you've got fear of missing out. Well, that's the time. Those are the times when I'll scale out on a chart and say, all right, where are we actually? Are we actually ready to, because you can see this was pretty close to where you knew to take a long yesterday, right? You knew that you should be selling, and I specifically even gave you a range for the open where to sell your calls that you held over the weekend. And I got that range from my other charting software, Webull, on the daily. So you'll see that yesterday we had this here, and as we work into this morning, it looks like we're getting bullish again. Maybe around 8:30 we get another sell-off, and you're going to be looking for support down here at 44.50, 44.32. Just pause these videos and transfer these charts to your own. And I'll bring up Webull here for you so you can take a quick look, and I'll show you the Webull chart that I've got here. This is the SPY chart that I use when I day trade. And I haven't even messed with this chart from yesterday. You can see this tag. This is funny. You can see the tag right on 444.11. Literally, that's to the T. It's kind of funny. This is right to the T. You could have taken this long into close yesterday. We knew to sell here. This yellow line and this red line is the exact numbers I gave you yesterday before open. It was the post that I made with the LAN party. A bunch of people sitting in front of a computer. I think at 9 o'clock I said, hey, if you come up into this range right here, this is where you sell on open. And if you know me well on Twitter, anytime I hold FDs over a weekend, even if they go up to 2,000 or 3,000%, I almost typically sell them all at open, right for this reason right here, for sell-offs like this. You don't have to. Oftentimes it does go straight up, but I often find that even if it is going to go straight up, that there will still be a red bar to allow cash options buyer to get in before that move up. So I typically sell right at the open, grab more if we are going back up. And so just from when I'm day trading cash market, if let's say I can't see where we're going here, right? Let's say this is coming down and I can't get a feel for where we're going, I will try to move out on a larger scale and see where we are. And you can see that beautiful arc, right? That nice, beautiful bar that came down. This was the buy yesterday at looks like it was 3:30, right? To take that buy for this open right here. Now, does this come up this morning? I don't know. My thought, I can't really tell you, yes, it's going up. Do I think it's going up? More than likely, I think that CPI is going to be a non-event. I think Wednesday is the setup for Thursday. I think I told you on Sunday that I believe that we're going to be pretty bullish early this week. Even with the sell-off yesterday, I still find us, they like to call it turnaround Tuesday. This looks like it is setting up for it. One last thing, none of this is bearish to me, believe it or not. This move here, when I see a bearish move, I'm expecting this in like a day, not in 14 days. It took 2 weeks, and it was at 3 points yesterday, off the high. That is not investors scared to enter the market. It is not. And it is not 15% correction. It really isn't. It can become that, but that's not what this is. And this bump up here, we were once again almost 3 points off yesterday. We're almost at the open today, possibly. Could be right back to that 3-point area. And in all honesty, I'd really like to see us sell down to this 440 down below. If we could get this sell down here, we know that everyone's going long down here. So if you just want to wait for that to happen, so be it. Wait for it to happen between now and OPEX. I think OPEX is on the 17th, right? So this is the 17th right here. And look at where we're at, 440 down below here. So maybe you just wait to put a trade on. Sometimes if you don't feel comfortable putting a trade on, just wait for your time so that you can take it big. You don't have to trade every single day, day trade 2-3 trades in a day. Sometimes you're just waiting for that one trade that you know is going to work. And actually, in a day yesterday, that was one of those trades, right? That was one of those trades on Friday. You're looking for these kind of things. Nothing here says we're going to go down 10 points in one day. Nothing, especially heading into OPEX. Well, I shouldn't say. Maybe on Friday we could dump heavy. But nothing's been saying that we're going to see that big, huge red bar that goes down 10 points between now and Friday. I don't see it. All right? So let's move on. From there, we're going to head back over here, and we are going to look at NQ. Let's take a look at NQ and see where that wound up. Same thing yesterday. Yesterday, you can see we had that nice push up, and this was into the open. And then we sold off into the open. We tapped twice here. These are the double taps that I always talk to you about. If you see us tap twice, 1 touch, 2 touch. This is the bear trap. We pushed back up yesterday. And then this was into 4 a.m. And lo and behold, we're pushing back up now. My assumption is going to be that there are players in the market, day traders, that want to keep NQ up into the open today, even though we are possibly going to sell it off. But you are going to look to close your longs into the open today, even if we push up here. Your key levels for today, nothing has really changed, right? 15,319, 15,381, 15,446, 15,516, 15,580. Hard resistance at 15,617. We talk all the time about, let's say we were to get bullish and we were to come up here, right? You can be bullish to here, but you got to close them out. If we rest here and then make a shot up, that's fine. You can take that one if you want once we get past this resistance. So let's be conscious of how long we take these. You know right here that this is looking pretty bullish, right? You had 2 taps down below. Now you've had 2 taps here. This might be a trend day. I would call Tuesday today probably going to be, it's starting to look bullish to me. So now let's move on to IWM. Or not IWM, the RUT. And this is one that I want to look at with you. On Monday, we discussed the IWM chart and that it looks bearish to me. And it picked its bootstraps up yesterday. I like IWM today. I liked it yesterday. It switched from being bearish to less bearish as the day moved on. I commented on IWM yesterday and small caps because there was a huge bid in shit stocks. I mean, a huge all engines firing bid on small caps. And this could be where our market recovers. You'll sometimes hear me say, if you actually see small caps sell off deep, that is your signal that SPY and big tech will sell off heavy. Not like this week. I'm talking heavy, where you see those 10-point down moves over a couple days. And we didn't see that yesterday here. This is not good for the bears. And it's not good for the bear positions, the short positions that are out there. There are some heavy shorting going on small caps right now in cash and in the futures market to take this down to that 210, 209 level. And on Sunday's video, I told you, I put these 2 blue lines here and I told you, if you start to see this happen, it starts to become bullish. Today, look for small caps to get bullish. And where this blue line is right here, that we put in yet on Sunday, if we breach this right here, you are going to see a squeeze much higher today in small caps. So keep small caps on your radar. This was an easy play yesterday. It ended up taking along here on small caps. I liked seeing this jump up, and I also liked seeing this resistance in the morning yesterday. We took this trade here. I didn't get a chance to take this trade into close yesterday at 3:30. I would have taken this trade yesterday into the close. It's slightly risky, but it's starting to become a bullish situation. This is starting to look bullish. Let's take a look at Tesla. And we had this nice move down here, this nice grab. This is kind of nice to see this grab. This was bullish for Tesla yesterday. It didn't quite get down to my buy zone. I was watching Tesla yesterday morning, and I didn't see that grab. My other concern was the low volume in this grab here. I would have really liked to have seen. I saw some great call options come through. I kind of figured that this might be the play for this week for Tesla to have 1 or 2 green days heading into OPEX, but I don't see this as being long lived out. If you see this nice blue line right here, this 50, that it's coming up to right now, this is concerning. I'd really like to see this cross above and then make another move higher today. I am still at this point don't have any new longs in Tesla. I'm still on wait and see here. I really do like that value area down here, somewhere around 700 or even as deep as 663. Hopefully that'll happen between now and Friday, maybe Monday. I get that nice deep dip. The last thing I want to show you today is Flow Algo. Had a request yesterday asking me about Flow Algo. And what I do is I get these alerts throughout the day. I get equity blocks and dark pool prints. Some people will say you can't figure out what are sells and what are buys. That is untrue. Each one of these prints has a signature to them if they're buying or selling them. This software tracks them over time. So when that new signature comes in, it's recorded. And then when that new signature, they match them up when they're sold out. This program also tracks if they're upside down or right side up on this dark pool activity. Then we have alpha signals here. These alpha signals down below here, this software uses an algorithm to say, hey, we're seeing, volume spike, the charts look correct, and we're seeing unusual activity on the options contracts. So the software starts to piece together. You're starting to meet critical standards, right? Standard 1, Standard 2, Standard 3, Standard 4. When I get these individual options that come through, I can decide if I'm looking for new positions, size lots, unusual activity. If it's just weekly, 3-day sweeps. Sweeps are interesting because they're highlighted in this blue and green color here. What's interesting is they're trying to hide the activity. When I make big trades on the stock market, I have to switch my trades, or I have to break them up. When I first started making money in the market, I would try to buy, try to buy like $100,000 in one option, spread it 300. I'd spread it across 300 lots, but I would do it all at the same time. And the order flow people knew what I was doing. And so sometimes when you see this flow come in, you'll see a dump or a slight drop in the market. And that's because they don't want to pay you. They don't want to pay you for those options. So you try to split them up so that it doesn't impact the stock price. So you'll see big moves in sweeps, and you'll see golden tickets match up with these alpha signals, meaning that we're at when we might have touched down on the 200. Let's say we touched down on the 200 MA and we had, I don't know, let's say the normal volume on a day in a stock is 10 million, and all of a sudden we're up to 70 million at 8 or at 9:45 in the morning. And at that same period, $5 million or $30 million in options come in the door. If all three of those things are met, we'll get a golden ticket. And when I show you this over here, there's no data yet for over here, but what I can do, this will show me through the day, this updates, and it starts to give you a picture of where the market is. It starts to show you that AFRM was the most bullish position yesterday for the future. It starts to show you that the Qs, people got real bearish on it yesterday. Not for half a day. These are big bearish positions on the Qs, and these are big bullish positions on AFRM. You can see that $6 million in Tesla yesterday that came in, right? This was a big bull position yesterday. You can see Info, JD, AMC, NFLX, and these form up as the day progresses. They don't. You see one here at 10 a.m. for Tesla, but you can see it scaled throughout the entire day. So you have to kind of put a picture together here and look and see, hey, was this push right here? Was it after? You have to think about, so let's say a stock was $10 yesterday, and then this morning at 9:30, it was at $20 at the open. If I see call flow coming out on that, I don't trust that call flow. It's usually just there to pin that stock now at $20 so that they can exit their equity side. Then they'll remove the call options. So you want to see this stuff develop through the day on these charts here to then take a long position in a stock. Sometimes they show themselves early and sometimes they don't. They also sometimes show positions in companies that are unusual, right? You might see, like SQ is everyone's wanting SQ to go up, but I haven't seen any unusual activity for SQ. So I haven't taken a long in it yet. So I'm looking for those things to start to firm up in stocks at times as well. And you can see yesterday how many dog shit small cap stocks caught a bid, right? So when I saw this yesterday morning, this is unusual. You don't usually see this many small caps catch a bid on any day. So when you see something like this taking place yesterday, I posted about it and said, hey, this is going to keep small caps up. And sure enough, it did. It did a good job yesterday keeping small caps up. The last thing I'll show you is heading back over here. This flow sentiment chart, it works and it doesn't work. When it works better in relation to what it was the day before and what it is heading into tomorrow, right? Now it's not showing me the, so right here we're at 82%. If the day before we were at 69% or 60% and we jumped to 82, which is what took place yesterday at some point in the late morning, I believe. When it jumps up here, I'll start to take longs again. You'll start to see the put flow drop over here. You'll start to see it head down. New positions, you might see them at 60,000, and you'll see call flow at 500 or 600,000. When I start to see this lopsidedness, this is showing you that we are bullish. Well, at least this is from yesterday, end of day. We were bullish into this close yesterday. This is very bullish heading into close yesterday. All right, so we're done with Flow Algo. When I post these positions to you on Twitter, the better ones to be following, I don't post them all. Sometimes I'll post just the flow that comes in for people that want to see their own tickers. But if I post specific flow, like if I post this TQQQ and it's got a sweep on it and I call it, hey, this is a sweep, this little bar over here, this Algo score, see up here it says Algo score, this gets a good score for if these are going to print. The last thing I'll leave you with when I post these is that you're looking for positioning. When I post, let's say I post TQQQ at 3:59, this was right at the close yesterday, but let's say it was at 2 o'clock in the afternoon, you might not be able to position in it until 2:15 or 2:30. So be aware of that. It isn't just, hey, he posted TQQ, buy it right now. Okay? That's all I got for you this morning. Good luck to you for the rest of today. And I will be on Twitter all day, I hope, again today. And one last thing. Please like and subscribe these videos. And if you're a new trader, or if you know a new trader, send them my way. And this is keeping shit simple, 101, right? This is keeping how to trade, how to make money, simple 101. Have a great morning, guys.